Hi, my name is Steve Rozenboom. I'm the Chief Financial Officer for Holy Cross Medical Center, and I'd like to share with you the results of our board meeting / finance committee that was held on Wednesday, April 28th. March results were pretty good for the organization. We had a positive operating income of nearly $228,000. We've had better months, but that post-COVID, that's been our best month by far. We did have a positive operating income in February as well, so that's 2 months in a row. A little too soon for me to call that a trend, but at least we are moving in the right direction. And I feel very comfortable with where we're at as an organization financially. Much better position than we have been in several years. Volumes in outpatient services across the board were up significantly from February. The area that was not up was our inpatient admissions. Even though March is a longer month, our inpatient admissions were down, but still fairly steady and kind of where we expect it to be this time of year. We're kind of in between seasons as we go through March, April, and May. The winter season from November to February is usually pretty busy. And then the summer season, June, July, and August is pretty busy. But those spring and fall months were a little bit less busy, but not this year, at least on the outpatient side. Our outpatient registrations are still very high, not a record high in March. We're not seeing quite as many patients getting COVID tests. We just started doing 2-day-a-week vaccinations in the middle of March. We had been doing 2 days a week in January. Backed that down to 1 day a week as our vaccine supplies were limited. But now, in the middle of March, we started getting higher levels of supplies, and we're doing very well with our vaccination supplies and getting those vaccines done twice a week. What may be hampering us going forward is we seem to be reaching maybe a saturation point for those people or patients that want the vaccination. Many of them have already received it. So we're seeing a little bit less demand for those vaccinations. And even though we can do between 1,500 and 2,000 vaccinations per week, the demand we're seeing is closer to 1,000 per week, at least in April. I know I'm talking about March financials, but just to share with you a little bit on the vaccination front, we're only seeing demand for about 1,000 patients a week, and that seems to be waning a little bit as each week goes by. But back to March financials and the volumes, imaging was just off the charts almost in March. Almost every modality was well above budget, well above previous year-to-date highs. The one exception was in mammography. Even that was above budget, very strong results. It just wasn't as high as some of the other imaging studies that have been done. I do want to start promoting the purchase of a new mammography machine. That machine has not yet arrived and won't be operational probably until June. But this is really going to enhance our mammography capabilities. It's going to give us some of the best technical service in the northern part of the state of New Mexico. So we're really excited to get that machine in here and start using it. A couple of other areas of volumes that I want to note is in the ED. Our ED visits were over 1,000. In February, we're below 900, so that's rebounded nicely. And then in surgery, we're above budget for the first time since July. And back in July, we had kind of a surge of patients as some of the elective surgeries were being allowed once again after the immediate pause with COVID that took place from March through May and into June. So July was a very busy month, but we topped that in March with 248 surgeries, a little bit higher than our budget, but really we've seen incremental increases every month since October, a little bit from October to November, a little bit more November to December. And then here in March, we had a pretty significant increase over February. So that's very good. I'm glad that we're able to provide that service for the patients that need it. And we hope to keep our surgery levels up and servicing the community at the level that they require. Another area that increased significantly were our ambulatory clinic visits. So Taos Surgical Specialties, Women's Health Institute, those areas really saw big increases in overall patient volumes. Yes, March was a longer month as far as number of days that we see patients compared to February, but it still was even a greater increase than just increasing the number of days. So very good to see that patients are starting to come back to our clinics as we start to move past some of the really dark times related to COVID. We're not out of the woods. We still have a lot of restrictions. Keep wearing masks, keep social distancing, keep washing your hands. We need to keep those things going forward. And I know the governor had a message earlier this week that in 6 to 8 weeks, we hope to be completely open for business in New Mexico. And if we follow those requirements, I think we'll get there. And Taos County's done a very good job, and I'm really proud of the job that the residents of Taos County have done in that regard. The volume increases that I've already explained really generated strong revenues for us as well. We had almost $13 million in total gross revenues, and the contractual allowances, or the amounts that the insurance companies and Medicare don't pay, still have been maintained at a reasonable level. So our net patient revenues had an all-time high of just over $6.1 million, a little more than half of what our total gross revenues had been. Added to that, we had strong other income that's not necessarily direct patient related, but our safety net care pool accruals that we do, provider relief funding, and the gross receipts tax that the county commissioners added to our other income back in July. Those all contributed as well. We needed all that extra funding because our total operating expenses were also very high. We exceeded $6.8 million in operating expenses, by far the highest month that we've ever had here at the hospital. Now, almost $500,000 of that is directly related to COVID response. The vaccination clinics, the testing clinics, some of the infrastructure that we've had to make changes to in the hospital. If you've been here, you've seen the temporary buildings outside the ED. Those are included in some of those expenses, but we are offsetting those expenses with provider relief funding. So provider relief funding is money that we received from the federal government earlier last year. We've been incrementally using that funding as we've incurred those direct expenses. But even recognizing those direct expenses, we've had some indirect expense increase. I'll call it infrastructure type increases to the overall expense structure within the organization. We hope to reduce or minimize as much of that as we can going forward, but some of that is going to be permanent increases. We have higher utilization of PPE, and the cost of the PPE itself has gone up as well. So that's just one example of the type of infrastructure expenses that will continue to be a higher level than they've been in the past. Many other expenses that are similar, but that's one of the ones that's easy to identify. Some of the specific expense categories that were higher than normal include salaries and wages and contract labor. Both of those relate directly to the COVID expenses that we've had, but also on the contract labor, we still have a number of open positions in the clinical areas that we're filling with travelers. And travelers are more expensive than having permanent employees. We continue to recruit. COVID has made it difficult for all organizations across the country, and including in New Mexico especially, to get clinical staff recruited and brought in. So we struggle with that, as do many other organizations across the country. Another area that was higher was our supplies expense. But in this case, supply expenses, a lot of that increase was related to the higher level of surgeries that we experienced in March. So it's okay to have higher supply expenses because that's generating higher revenues through the surgery area. And so you can't always look at increase in expenses being a bad thing. Sometimes it's a good thing, and that was the case this month for supply costs. So subtracting all of our expenses from the net patient revenues of $6 million plus the additional operating income that was non-patient revenue. We ended up with the $228,000 operating gain that I mentioned at the beginning of this video. That leaves us year to date through 10 months. Our fiscal year is March is the 10th month in our fiscal year, with a $35,000 loss from operations. That's compared to a budgeted loss of about $810,000. So we've had a much better year than what was budgeted. Very surprising. The budget was completed before COVID hit last year. So to have solid operating results that were better than budget during the year with COVID, I'm very pleased with. I think the entire community can be proud of the organization and that we've been able to achieve some level of financial success. Below the operating income line, we have our mill levy funding, donations, other contributions. When you add those amounts in, we're at a positive $1.5 million year to date for our total revenues in excess of expenses. We still have about $1 million left of our original mill levy authorization, the first 4 years that we had. That has to last us until November, probably into December and January, before we start seeing new funding coming through from the reauthorized mill levy from the vote last November. So we do have the gross receipts tax that's helping on the operating expenses, but we really appreciate the money we receive for the mill levy to help with our equipment needs, including the mammo machine that I talked about earlier, and building infrastructure, heating, cooling, flooring, remodeling patient rooms, all that kind of stuff is what we're going to be using that mill levy funding for going forward. Our total cash actually increased from February to March. Two big reasons for this. If you watched the video that I had last month, in February, we only had about $3.7 million in patient collections. Most of that from insurance companies, not necessarily from the patients, but patient care related expenses. We collected about $3.7 million, which was below our normal average of $4.5 to $5 million. In March, however, we collected $5.7 million, a $2 million improvement month over month. In addition to that, we did get our fourth quarter from calendar year 2020 safety net care pool funding, which is just under $1 million. So the 5.7, which was a $2 million improvement over over February, plus the $1 million of the safety net care pool, that's a $3 million cash infusion improvement over the previous month. In addition, even though we had very high expenses, the $6.8 million, many of those invoices won't be paid until April. So that cash didn't go out the door. Our accounts payable, days in accounts payable did increase to about 37. That's not alarming. That's a good place to be at about 35 to 40 days. So we're okay with that. Our total gross days in accounts receivable dropped almost 4 full days from almost 62 down to 57. So I think our statistical benchmarks in those areas, as you compare it to the industry, we're in pretty good shape. We do still have a significant amount of money that we anticipate will have to be repaid back to Medicare. They've started recoupment of accelerated payments that we received last April, I believe it was. They started recoupment of those in this April. So even though that hasn't impacted our cash balances in March, it will start impacting us in April going forward. And I believe they started those recoupments on April 10th. And the first 2 weeks of those recoupments, it's only been $53,000. They're only allowed by current legislation to recoup 25% of what they would normally be paying us. So it's at least softened a little bit from just a 100% recoupment. We wouldn't see any cash at all. So it's a little more gradual than that, which helps us a great deal on our cash flow. So we currently have about 87 days of cash on hand at the end of March, but a big chunk of that is still potentially repayable back to Medicare. The only other financially related item that took place during the board meeting was a review of the draft budget that has been worked on so far. The final budget will be submitted to the board for their review at the May board meeting. The current budget the draft budget was submitted by all the managers and directors to me. We compiled those totals. It shows about a break-even budget at this point in time, but I need to review the specific details with each of those department managers and directors. And so there'll be some fluctuations in the overall budget, but I do hope that it does come in close to a break-even, maybe a little bit better, could be a little bit worse. Our budget for last year had about a $900,000 loss, not taking into account the mill levy income, which comes below the operating income line. So when I talk about a break-even, slight positive, slight loss, I'm talking about the operating income, not the total revenue and excessive expenses. So we hope to come close to a break-even, maybe a little bit better. Time will tell over the next 3 weeks as I continue to work with those managers to finalize the budget, fine-tune it, get it compiled for the May board meeting. That's all I have for now. Thank you very much for watching.